Hey guys, Mike here. So today we get to answer all your questions and comments, and you had some really good ones about like how will the Fed affect Bitcoin when they cut rates, and we'll look at that one. A lot of things like when it comes to the wash rule, I bet you there's definitely some things you do not know about the wash rule because everybody thinks it's horrible when it happens, but we'll go into that one. Also, what happens when the contract between Saudi Arabia and America, as far as them buying in US dollars, how's that going to affect the dollar? We'll talk about that one as well, and a few others. So as usual, feel free to participate in the comments. I definitely would like your insight on some of these questions as well. So as usual, let's get right into it. And the first one says, Mike, can you discuss the market behavior during the transition from one quarter to the next, in this case, June to September contracts? Also, what about window dressing for the second quarter ending? Well, we'll talk about, I'm going to really focus on the window dressing because a lot of people don't do futures and stuff. But I mean, when it comes to contracts, I'm not sure what you're talking about, the behavior when it comes to contracts. But if you're trading futures, just make sure the contract you're on at that point in time until it expires has volume and you'll be good to go. But when it comes to window dressing, this actually is a real thing for those who don't know about this. And what happens at the end of a quarter or a physical year is you will see these fund managers try to window dress, try to make sure that their portfolio, their ETFs, things like that, look very attractive to people whose money they want, right? So, for example, the portfolio manager may sell losing positions so as to display only positions that have gained in value. Now, the tough part about this is I've researched this. Like, you can literally go into, like, for example, you would think they would be buying up the Mag 7 at the end of every quarter to make it look better because those are the ones that have benefited the most over the last couple of years. But you go in at the end of the quarter, you go in at the end of March, end of June, end of whatever, there is no rhyme or reason to it because it is so specific to whatever's going on with that ETF, all right, or whatever it is, okay? And so we know they do it. There's no doubt about that because remember, you have to look at their prospectus and you look at it and you go, whew, good Lord, minus 10% last quarter, I'm not putting my money there. And so they're trying to make it look real good for us, okay? So it does happen, but I personally, let me know if you've seen this or how you're spotting this, seen it really affect the market in either way. You'll see at the end of some quarters it's going up, at the end of some quarters it's going down, no rhyme or reason. And so, but it does happen. All right, be very clear on that. Now, next one says from Joe here, when rate cuts start to happen, how will this move Bitcoin and crypto? It's a really good question, Joe, and I'm going to show you something. You can tell, I assume you agree with this, that Bitcoin is ever evolving. The crypto market is ever evolving, especially now that BlackRock and the big boys are involved. But when we just pull up the Fed funds rate, because this is the real, I guess it's not the first rate hiking cycle, it's the second one Bitcoin's been through. This is the first one it's really been through where it's mainstream, right? And you can see it acts like what? The stock market, right? They raised rates like crazy and it wasn't doing too good until about maybe a third of the way through. And then when they paused, it ramped up and all that good stuff. And you look right here, this was 2017, 18, 19. This was this rate hiking cycle, which wasn't nowhere near as like the one we're going through now. But you can see it went up like normally would, like stocks would. And then it crashed because it's Bitcoin. It's not mainstream at all. And it's running through its cycle. And so there was no rhyme or reason to it, right? You bring up the 10-year treasury. Maybe that's got something to do with it. At first you go, wow, they're kind of correlated. That's weird. 10-year treasury goes up, Bitcoin goes up, 10-year treasury drops, Bitcoin drops. And you see that then all of a sudden they completely reverse and 10-year treasury goes up and Bitcoin drops and, you know, vice versa. So when this one, you know what? No real rhyme or reason to it. So I think what's going to happen with Bitcoin, and again, the cycle has a lot to do with this, but if we pull up the QQQ and they go to do what they've done every time except once and cut rates, the market crashes, guess where Bitcoin's going? It's going down. But when you look at it, the one thing it is tied to pretty consistently, you know, we have these divergences sometimes, is the QQQ, technology stocks. I mean, you can see when it goes up, Bitcoin goes up. When it goes down, Bitcoin goes down. When it goes parabolic, you know, Bitcoin goes parabolic. And you can see there's kind of a divergence been happening, you know, last week or so here, right? And you get those divergences every once in a while. But for the most part, that's the only consistent one I can find where I say, yeah, pretty much sticks with it. When you look at it, I mean, look, crypto's obviously still way more volatile. Now the big boys are involved. We don't know if the 4-year cycle, the normal 4-year cycle for Bitcoin is even going to, you know, do its thing where it's dropping 75, 80% at the end of it and all that good stuff. You know, are these large ETFs around the world now, not just here, going to allow that to happen? That's really the bigger question. All right, so we got to make that out. But, you know, it just makes sense to me if the market falls, can you see crypto not coming down with it? I mean, I don't know. That would be interesting. Let me know what your thoughts are for sure. Good question, by the way. Now, next one comes from Morgan. He says, my girlfriend is worried if she sells a stock that has gone up in value and then buys it again, it makes some difference in the amount of future gains. if I bought it at $10 and sell it at 15, and then buy it again at 15, would the latter go up more? And when I read this, I think I understand your question, but maybe I don't. But here's how I'm going to basically put it to you. Let's say you have two accounts. You can see them both at the same time. Both of you are going to buy 100 shares of company A. You get in at $10, like you said. But the one person on this side says, well, I'm holding until 20. I'm not selling at all, right? So they go all the way up to 20. Boom, what is that? So 10 to 20, 100%, right? So, and then they own 100 shares, so it's $20. So 20 times 100 shares, $2,000 is what they end up with, right? So that's this person. Investor number two over here says, okay, it goes from 10 to 15. It's a big move, right? So that's 50%. And you're like, oof, I think we're good. And so you sell. Let's say it goes to 17, it comes back down to 15 to retest it, and you say, oh, I'm going to take this money I got, right, which would be $1,500. I'm going right back in at 15. So it's like you never did anything, right? You sold at 15, you picked it back up at 15, it goes to 2,000, all right? But here's the difference, okay? So at the end of it, you sell at 20, right? So you got in at 10, got in at 15, got back in at 15, which basically wiped out the sell buy thing right there, got to 20, okay? So what is that? What do you have at the end of the day? You have $2,000. Same as investor over here. The difference is the percentages though. See, they're at 100%. Your first sale was at 50%. You came back in at 15 to go back up to 20. If my math is correct, and correct me if I'm wrong, I think it's 33%. So your gain for your transactions is 88% versus this person's 100%, but you're selling with the same amount of money. I know that sounds crazy, but I literally sat there and wrote it out on paper. And I was like, yep, that's right. And so maybe both of you are right in this. And so it doesn't matter because at the end of the day, it's about the money, right? So you both have $2,000. It just worked out for you that way. When you sold at 15, it came back down to 15 instead of running off to 20 and you getting left behind, right? So I'm not sure if your girlfriend's right, you're right, whatever, both of you are right. But that's how I see it. Let me know in the comments if you see it differently and I just screwed that up. So, or I'm misunderstanding your question, all right? Now, Becky says, could you explain about a wash rule, which I was actually going to get into. It made me think of this in the last question, but thank you for asking this. And this is something I'll guarantee you a lot of people don't realize about the wash rule. I didn't realize this until my accountant pointed it out. So basically, if you buy a stock, sell it for a loss in a nutshell, and then like within 30, I always say 31 to 32 days, buy it back or buy something similar, right? And then you say you have a gain and you think, oh, cool, my gain is going to get washed out, you know, my taxes I'm going to get to take that loss. Well, no, you're not. Okay, that's not going to happen. So let's look at this example, right? And there's two good things that happen here, though. Let's say you bought 100 shares of XYZ stock for $10 per share. 1 year later, the stock starts dropping. So you sell it, the 100 shares for $8, right? So it's $200 loss. 3 weeks later, XYZ is trading at $6 per share. You decide the price is too good to pass up, so you repurchase it. This triggers a wash sale, all right? Which means you don't get to use those losses to write off on the gains. Now, as a result, the $200 loss is disallowed as a deduction on your current year of a tax return and added, here's the good thing, to the cost basis of the repurchased stock. That bumps the cost basis up of your $600 of replacement stock up to $800. So if you later sell that stock for $1,000, your taxable gains will be $200 instead of $400. And because you previously held XYZ for a year, it is automatically being treated as a long-term capital gain, even if they sell it after just a few months. So pause this, read this over, okay, so you understand that. But that is something a lot of people don't know. I didn't know it until my accountant actually explained it to me, okay? So hopefully that helps you out with that. Now, next one says, what will the end of the contract with Saudi Arabia to buy oil in dollars have on the U.S. dollar? And this is a good question. I'll try not to go too in-depth to bore people with death, but I understand, obviously, with the world's currency, right? So when you look at this, a lot of analysts say, okay, you got the petrodollar agreement expiring, and we've had that in place for quite a while now, right? So at present, the kingdom is still accepting the U.S. dollars in exchange for oil, but some of the world's largest economies are attempting to change that, notably China. For years, China has tried to get Saudi Arabia to buy in the yuan. They've been resistant, right? But nearly 80% of the global oil sales are priced in dollars. However, Russia, Iran, Saudi Arabia, China, and others are increasingly shifting to local currencies and energy trade. In 2023, 20% of global oil was bought in other currencies. And the reason why it's important because if this trend continues, not just this agreement, then of course it weakens our ability in the U.S. to issue dollar debt and earn dollars for exports. And there's kind of an argument saying it will affect the dollar. Then some people say, well, it's not really going to affect the dollar, because even if Saudi Arabia does this, which they seem to be, they're going to convert the non-USD currencies into USD anyway, right? Because the other currencies are basically weaker. And so that makes sense, and maybe less stable, of course. And so, we'll see how that's going to happen. A lot of people say it won't affect it. Maybe you won't notice it. But the biggest thing is going to be the trend. If more countries continue to do this, because I believe it was Britain, if I'm not mistaken, had the last world currency status. What was it, 1915, 1917? I remember reading about it. But it's never good when you lose that status. We got a long way to go, obviously. But, of course, I always say the crazier DC gets and the more debt they keep running up and all that stuff, and the more countries keep running away from the dollar, you got to think to yourself, it will probably definitely affect the dollar, just depending on how long it's going to take. So I don't think anything's going to fall off a cliff or anything. One thing to watch out for, come on, the dollar, is watch out for Japan to intervene, because I think I read yesterday morning that their currency is at its lowest it's been in like 34 years maybe, and normally they tend to intervene overnight when we're sleeping or whatever, and you'll see a spike down the dollar. But see if that happens as well. So you kind of got a lot of stuff going on, because a lot of stuff affects the dollar. So just keep that in mind. Hope that helps. And please, in the bottom, if you're a currency expert or you trade currency, like, we could definitely use your help on that one for sure. I'd really like to read about it, and I'll share it with the community. Now, the next one says, Mike, can you talk about BABA? I remember you were saying that the Chinese stocks looked like they were about to fall back in stage one a few days ago, and that there was a big support coming up and that it needs to bounce off of that. Now that BABA has fallen below 75, which is not good, does BABA have a chance to keep going up? And, BABA has been so lacking a lot of these other stocks. I mean, I don't know what it is about this one, because I don't track Chinese news all that much, but it's one of those things where, yes, it's coming down. You see this trend line it broke out of, took forever, explosive move up, right? And it's coming down. It's in this discount area right now, where it's hitting this and laying on the 0.7 fib. 0.79 is below that, back in this stage one area. And when we pull up the 30-week moving average on here and look at this, just kind of sitting there going, okay. You can see as of Friday, it is setting right there on the 30-week moving average once again. And again, you're not out of stage one till this starts to move up. All right, and you can see it's just basically flat, trying to hold it. But don't be surprised. I mean, it's just weak. Don't be surprised because it had a big day down on Friday because of some news that came out. But, can it bounce? It's in that area where it needs to bounce. It's been in that area for, all week now. And so it keeps weakening while some other Chinese stocks are popping. And so just keep that in mind. It's not really heading with a group now, which makes you even riskier. But, again, we'll see. It's a big name. A lot of people like to buy it on weakness, and it is at weakness. So, yes, it has a chance, but it needs to happen fairly quickly, because 75 was a big level to lose. Now, last one here. Hey, Mike, good question for the weekend that I think everyone will be interested to hear more on. Very curious how long you've been trading and how you've become so knowledgeable on all what you do. Cheers. Thanks, from D. Rebby, I think that is. And I've talked about this before, but honestly, just trading, year and a half, 2 years, really kind of get into it and stuff. Like futures is the one I'm really trying to master now. But, investing obviously a lot longer than that and stuff. But the stuff I come up with, I mean, it's just putting in the work, and some of it's my ideas. Members will put in requests. You guys ask, and I go, hey, okay, I'll research it. And the one thing I learned when I was getting my MBA, and anybody who's been through that kind of school knows, got to be good at research to make it through there, to write all those papers and stuff. And I'm pretty fast at it and pretty good at it. And I don't like taking stuff when somebody just gives me a chart and saying, oh, according to 1950, who cares about 1950? Look, 2010 up. That's what you need to worry about more than anything else. All right, when it comes to doing this kind of research, all right, because the market is different, it's changed. But I do all this stuff. My motivation is for my kid, right? Like I don't want him to go through what I went through, right? We grew up poor, and I had to join the military to even get to have a chance to go to college. But it's one of those things where I always tell myself, and I went through many a finance class, so you are not going to learn this stuff in school. That's just the way it is, all right? And so, I always thought to myself, imagine being, 21 to 30 and really understanding how the market moves, how to dollar cost average in, how to grow accounts, really, right? Not listening to mainstream media and all this crazy mess. And when you know how the market moves, you know when to be in, when to be out, all this kind of stuff. If I knew that then, you realize how much faster and how much earlier you would be able to retire. I mean, it's just nuts to me, right? And so I think that for him, hopefully, and other people, whatever, so I always say, take it, give it to your kids, and teach them the basic stuff and all that good stuff. And so that's my motivations, how I do it. It's what I like to do. You know, so this channel has stayed the whole time I've had it, right? I've had plenty of chances to go a different route and probably blow up, you know, as many views as I can get, but I was like, nah, it's going to stay majority. You can get your daily brief, you can get whatever education. Sad part, I will say, of having this channel is you learn good stuff and bad stuff, meeting a lot of great people. But the one thing you learn about a lot of people also is, and being in this world, this ecosystem I'm in on YouTube, is that the longer we go, the less people like education. Like really don't want to learn. They want to be somebody grab their hand and literally do it for them. Like that's one thing I've learned. It's kind of sad. I mean, I've told my son that don't be that person. It drives me nuts. But more people would rather watch flames and end of world videos for sure. You can go look at the views than they ever would, you know, the people that are actually trying to at least show them something, right? So, and maybe one day that'll change. Hopefully my son's generation will change that, but we'll see. Anyway, hope you guys got something out of it. Please hit the like and subscribe button. Appreciate all the questions. Feel free to put more questions for next week's video. Feel free to help out on some of those answers if you'd like to elaborate. I read every single comment. So have a good one, and I'll see you tomorrow to set up the week.